Welcome out to Peak Horizons Capital Weekend Review and Playbook Prep. This is part of our week ending, week planning market analysis that we do for the preparation of the week ahead. We record a partial of it and we share it with you just so you can see how we work internally on how to get ready for the week ahead. Looking at our market gauges, we are in a currently uncertain market as price. What a crummy way to end the week. Price gap down out of its tight range to the downside, below the 20-day, below the 50-day, and then failed to close back above the 50-day, putting us in an uncertain market. You're taking a step back and we'll look at the chart. The intermediate trend is still there, and we have to be bullish during the intermediate trend if it's bullish. So we are looking still for opportunities to get involved, but right now we need to be a little bit more cautious. As you can see, the short-term trend has gone bearish for sure. So returns for the day kind of ended up not too well. S&P 500 down 0.99%. And so we'll see how that plays out into next week. Let's go ahead and click on over to the intermediate trend. Looking at the intermediate trend, you can see, taking a step back, that all looks well. In fact, the moving averages continue to catch up, narrowing down the extension above those moving averages. Where now looks like we are now, I thought the percentage was right here on the screen. 5.34% above the 30-week moving average. So we'll see how this works out. But we'd rather have us go sideways and get the moving averages catch up than just kind of drift off and go straight down and slice through the moving averages. So looking at the short term, like I said, what a way to end the week. Things were looking decent as we were continuing to consolidate and moving sideways, but that gap down was kind of hurtful, you know, to have expectations of possibly breaking out and maybe even like going higher, maybe even challenging new highs to have this happen. But this could just be a shakeout. It could be a one-day kind of, you know, shake all the weak hands out, turn back up. We did get a minor bit of defensive in our more aggressive portfolios. And when I say a minor bit of defensive, we sold some of our leveraged SPX positioning that we had in SPXL. So, you know, but we'll put that back on if we turn back up here. It just doesn't make sense to be so bullish if we have this kind of action, because we could go down lower. We could go down in this area. We could go down this area. Who knows exactly how far we decline. Could be just one day. Could be right back up, back in the range, and then eventually challenging. But we don't hope for price action to go in our favor. We make decisions based off of the actual price action and try to position our portfolios to take advantage of trends, both short-term, intermediate term, and long-term. If we look at our exposure resistance model, or ERM, which basically has a portion trend, a portion breadth, and a portion sentiment, we can see that the trend has really fallen off. Breadth is still there, meaning there's a lot of stocks that are seemingly participating, maybe advancing more advancers than decliners, more stocks making new highs than making new lows, and then also more stocks over the 20-day moving average. But the stocks that are really driving the market seem to be struggling, and there's possible rotation. We'll look to see in those areas. I want to jump on over to the trend score, since that is seeming like it's the biggest challenge. One of the biggest things that we were looking to see that could turn up, made a slight little bit of green, was the PMO. When the PMO turned back down, we really lost that sort of maybe momentum that we were gaining off of the most recent bottom of earlier in the month. So we're really just kind of playing a neutral positioning right now, not trying to get too aggressive, not trying to blow out too many positions. Let's go ahead and jump on down to the RS ratio. Just kind of look at, see what is performing. We saw that the FANG was making a move up and failed. We saw that the S&P 500 was making a move back, is now turned back down. We're looking at QQQ, really the big culprit here, having a lot of struggles and looking like a nice relative strength trend down versus the S&P 500. The MAGs started performing, and then that kind of sold off. Looking over here, tech is still a big issue, as a lot of these gains are still consolidating. A lot of the memory stocks that kind of went through the roof, they seem to be pulling back now. We'll maybe remember to take a look at that. But here's the tech chart, and you can see just doesn't look very good. The last 2 days really are starting to put the nail in the coffin for this one. We'll see if it can turn back up, but breaking below this low, just not the best action. If we're going to come over here and maybe look at industrials, faded down a little bit, but then looks like they're trying to gain support. Nothing wrong with industrials. In fact, probably a place to look. Let's go ahead and look. Energy starting to make a little bit of a move here. Relative strength wise, looking decent. Might be a place to look. I mean, look at financials, a long term, and that's why we have a position in Goldman Sachs, is because we have financials performing. Healthcare, it's why we have a position in Eli Lilly, has really been doing better. Consumer staples finally popping its head up. Real estate popping its head up. See, bonds starting to curl back up a little bit. As relative strength charts, all these are relative strength charts. Here we have the oil fund USO coming back up. We'll see if it hits this 50-day rejects and rolls back over, as this could be considered maybe a trend down and an ultra short-term trend back up. So let's go ahead and look at some financials if we can. We'll go over the market lens, see if we can bring up our list of ETFs here. And here we are in XLF. And you can see looking very strong and sort of coming to this point of challenging old highs, getting a little bit of resistance like things typically do. If we go ahead and look at a couple of the stocks in here, we can see TRV, Travelers Company, just a rocket up today. We can see AIG, American International Insurance, a rocket up today, but just in an overall funky base. CNF, Cincinnati Financial Corporation, looks like this one is looking to gain some support at the previous base high, which is this area right here, and turning back up. Might be something to look at. And then we'll look at Chubb Limited, same sort of type of situation. Those are the ones that were up today. I'm not really seeing much else that's really very interesting. I mean, here's our position in Goldman Sachs. Just very disappointing as financials continue higher, but maybe this is going to gain support right here and turn back up after a nice earnings move over here on the 14th. So we'll look through the rest of those later. Let's go ahead and take a look at XLI, another one that we kind of identified. We have a high point right here where we had resistance, move down, bounce off the 200-day, moving sideways above that resistance, coming back down and testing. We'll see if this thing is ready to turn up as it collides with the 50-day moving average. This could be a place to look. Some of the stocks inside this ETF are GE. Not too bad, not too good. We have Caterpillar, which was a big leader. That one kind of breaking down a bit. We have Boeing, just not really doing much of anything. You know, sometimes it's just better to sit on your hands and be in cash instead of trying to swing the money around for the rotation. That's basically how we've been playing it, although we would like to get some gains if something pops its head up and shows us that we should get involved in it. So that's what I got for you this week. Just a really quick review. Not a whole lot going on. The market seems to still be pausing based off of earnings season just getting underway this past week. We'll see if there's any earnings that really ignite this move forward. But that's what we got for you. Take care. Have a wonderful weekend. We'll be right back at it on Monday.